Tesla is once again making headlines, but this time it's all about China. The electric vehicle giant is seeing a surge in sales in its most crucial market, and it couldn't have come at a better time. With a challenging Q3 and European sales lagging behind, Tesla is turning to its stronghold in China to potentially save the quarter. But the bigger question looms. Could this sudden sales uptick not only rescue Q3, but also ignite a stock rally that sends Tesla to all-time highs in Q4? Buckle up, because the ride is just getting started. Tesla's fortunes in China are turning around in a big way. After a slower start earlier in the year, the automaker has seen a surge in deliveries, with September showing promising numbers. Recent data shows Tesla delivered over 31,800 vehicles in the first half of the month alone, bringing its total for Q3 in China to well over 230,000 vehicles. This rebound is coming at a critical time, as China remains Tesla's largest international market and a crucial source of revenue. While sales in the US and Europe have faced hurdles, China's demand is providing a much-needed lifeline, putting Tesla back on track to close out the quarter strong. Could this momentum from China be the key to salvaging Tesla's Q3? The numbers suggest it's more than just a possibility, it's already happening. Let's dive into the numbers that are driving this optimism. In August, Tesla delivered over 86,000 vehicles in China, followed by a strong showing in September with more than 31,800 units registered in just the first 2 weeks. While these numbers might seem impressive on their own, they hold even more significance when compared to Tesla's struggles in other regions. In Europe, Tesla's deliveries have dropped by over 70,000 units this year, a sharp contrast to the growth in China. Even in the US, Tesla is pushing aggressive sales incentives to keep up. However, the 230,000 vehicles delivered in China this quarter might be just what Tesla needs to offset these losses. The question remains, will it be enough to truly save Tesla's Q3, or will the gains in China simply help soften the blow? Either way, the Chinese market is proving to be Tesla's strongest card right now. Tesla isn't just relying on natural market demand to drive sales in China, it's pulling out all the stops with aggressive strategies. Earlier this year, the company introduced 0% financing in China, a bold move designed to boost sales in one of its most competitive markets. And it's working. This financing option has drawn in new buyers and helped Tesla regain momentum in a market where competition from local EV makers is fierce. These strategic moves reflect how Tesla is adapting to maintain its dominance, even as other markets like Europe and the US experience turbulence. By focusing on China with these consumer-friendly initiatives, Tesla is not only stimulating immediate sales, but also positioning itself for longer-term growth in a market that could continue to be its lifeline. With these incentives, Tesla is showing that it's willing to do whatever it takes to stay on top, even if it means sacrificing margins in the short term to secure dominance in the EV space. The big question now is whether these strategic plays will be enough to deliver the strong Q3 performance investors are hoping for. Beyond just sales numbers, Tesla's potential surge is tied to the broader economic environment, specifically interest rates. Historically, Tesla has thrived during periods of lower interest rates, and we're seeing a similar setup now. With the Federal Reserve recently cutting rates by 50 basis points, Tesla could be poised for another major rally, much like what happened between 2019 and 2021. During that period, Tesla's stock skyrocketed following a series of rate cuts as lower borrowing costs allowed the company to invest heavily in innovation and expansion. Lower rates are a huge boon for growth companies like Tesla. They make borrowing cheaper, allowing Tesla to fund projects like new factories, R&D for autonomous driving and battery production, all key to maintaining its leadership in the EV market. As we move forward, the market is already anticipating further rate cuts, which could strengthen Tesla's ability to scale and innovate at a faster pace, boosting investor confidence. The alignment of strong China sales and favorable macroeconomic factors may well be the catalyst that sets Tesla up for explosive growth as we head into Q4. Could we be on the verge of seeing history repeat itself with another Tesla stock rally? All signs are pointing in that direction. On the technical front, Tesla's stock is showing signs of gearing up for a massive move. Analysts are pointing to key indicators that suggest the stock could be on the brink of a breakout. One major signal is the volume shelf, a concentration of trading activity around the $260 price level, which provides strong support for Tesla's current stock position. This kind of volume buildup typically signals that a significant price movement is coming, and in Tesla's case, the potential is leaning bullish. Adding to this is the moving average convergence divergence (MACD) indicator, which recently made an upside cross. This is a classic bullish signal often seen just before stock rallies. Historically, Tesla has followed similar patterns, entering periods of consolidation before surging to new highs. With both the volume shelf and MACD in alignment, Many technical analysts believe Tesla is primed for a major upward move in the coming months. If the stock continues to hold above key support levels, this technical setup, combined with Tesla's improving fundamentals, could set the stage for a powerful rally as we head into Q4. The question now is whether this technical momentum will be enough to overcome the broader market challenges and carry Tesla to new heights. As we look toward Q4, there's a lot riding on Tesla's ability to maintain the momentum it's building in China. Analysts are cautiously optimistic, projecting Tesla will deliver around 460,000 vehicles in Q3, marking a 6% year-over-year growth. If these numbers hold, it will set the stage for a strong start to Q4. However, it's not just about vehicle deliveries. Tesla has several exciting developments on the horizon that could further fuel investor optimism. One of the biggest potential catalysts is the much-anticipated robotaxi event scheduled for October 10. During this event, Tesla is expected to unveil its roadmap for autonomous, self-driving cabs, a product that could revolutionize the ride-hailing industry. If Tesla successfully outlines a clear plan for its autonomous vehicle technology and provides a timeline for deployment, it could signal a new era of growth for the company. Beyond just selling cars, Tesla could become a leader in AI and mobility solutions. That said, while the prospects are promising, challenges remain. Tesla must prove it can maintain high sales volumes and continue scaling operations without sacrificing margins. The company's ability to innovate, particularly in areas like AI and energy, will be critical to sustaining its competitive edge and justifying its high valuation. With the combination of strong sales forecasts, exciting product launches, and favorable economic conditions, Tesla is positioned for a bullish Q4 if everything goes according to plan. As Q4 approaches, Tesla stands at a critical juncture where all the pieces seem to be falling into place for a potential stock explosion. If the company can maintain its strong sales momentum in China and effectively navigate challenges in the US and Europe, the stage is set for Tesla to reach new all-time highs. The combination of solid deliveries, particularly in its key Chinese market, favorable macroeconomic conditions with lower interest rates, and the excitement surrounding new innovations like the robotaxi could be the perfect storm that propels Tesla's stock to unprecedented levels. Investors are already buzzing about the possibility of a major rally, with some projecting a surge beyond $300 per share. With technical indicators flashing bullish signals and strong fundamental drivers in play, Tesla seems poised to break past its previous highs. But it's not just about short-term gains, this is about long-term positioning. If Tesla can continue innovating while maintaining its dominance in key markets, Q4 could be the quarter that solidifies its status not only as an EV leader but as a dominant player in the broader tech and AI landscape. The question is no longer whether Tesla will recover from its Q3 hurdles, but whether it will leverage this moment to ascend to new heights. If the stars align, we could witness Tesla reaching levels that once seemed unimaginable, with the stock soaring to new records by the end of Q4. Buckle up, this could be Tesla's most thrilling ride yet.